What's up traders, welcome to Failure to Displace, and in this video we're going to take a look at the OTE session liquidity sweep strategy that I've been working on for the past couple of weeks. For those of you that don't know, OTE stands for Optimal Trade Entry, and it is a Fibonacci level identified by ICT where we can often find a reaction as price is retracing. I've been backtesting this for the past couple of weeks and the results have been absolutely fantastic. So from June the 5th up until July 27th, which was yesterday as I'm recording this, my win rate has been 70%, and that's based on a take profit of 1 to 3 RR, which means if I'm risking £100, I'm expecting to earn 300 from a take profit. So a really good risk reward ratio. In total there have been 41 trades to be taken. And of those 41, there were 28 wins and 13 losses. Now, based on such a high risk reward, that's bagging us a net profit of plus 71R. So that is pretty insane. The key benefits that I really like about this strategy is that we are only going to be using one time frame, which is the 5-minute time frame only. Because we're only using the 5-minute time frame, we have no higher time frame bias needed. The strategy is essentially a set and forget entry and exit model, so there's no trade management. We're not going to be doing partial take profits, and we're not going to be moving our stop loss to break even. So that means there's less human involvement required, which means that we as traders can't mess this up. It's a pretty mechanical system with no or very little discretion needed. And because we've got such a good risk reward at 1 to 3 RR, we only require a 30% win rate to actually be profitable. Which means as we're learning this or working through the process of nailing this strategy, we can afford to take losses because essentially one win accounts for 3 losses. So it's a really good profitable strategy. Before we jump into the rules for the strategy and some example executions, there are 3 indicators that I would recommend you guys installing to help better see the charts. The first indicator is a session liquidity tracker. This indicator plots green lines for untapped session liquidity and red lines, as you can see from this New York PM session here, once the liquidity has been taken. We're going to use these as reference points to see when we're going to be hunting for our entries, because we want to see the green untapped liquidities get taken and then a reversal take place. The settings that I've got on the session liquidity tracker are all standard as far as session timings go. I've changed the show history to maximum, so I've got as many lines on there as possible. It's going back in history as far as possible. Extend unrated levels. So this is extending the green lines across the entire chart, so I can always see them as price is approaching them. And I've unchecked show fair value gaps because I'm using a different fair value gap indicator that I really enjoy. And I've highlighted show new week opening gaps and just change the colors to this orange color so that they show up on the chart. New week opening gaps are not essential for this strategy, but I do like to see them as a reference point. The next indicator that I use is sessions by Lux Algo. This indicates my timing windows when I'm actually going to be taking trades. So that's London is highlighted in pink and New York in the orange color. The timings and the settings for this, New York is 8 AM till 12. We've got 12:05 just for a little overrun so that the chart actually ends at 12. London is 2 AM until 8 AM. So essentially we have a continuous trading window of 2 AM through to noon New York time. But I'm separating this into 2 separate sessions because I need to see if New York is sweeping London's high or low. We do have the Asia session, which we don't trade, but it's on here for reference, which is 7 until midnight. And then the New York PM session, which is 1:30 until 4. Again, we're not utilizing this in this particular strategy, but I have got it on the charts. And the final indicator that I use is fair value gaps by Nephew Sam. So this indicator plots fair value gaps as they happen. Red colored for bearish fair value gaps and green colored for bullish fair value gaps. So again, we will utilize this within the strategy. All of the links to the indicators will be down in the description box below, so you can access those and then set them up as required. So now let's take a look at the rules for this specific strategy. We're going to be trading London 2 AM to 8 AM. This is all New York Standard Time. and then New York 8 AM till 12 PM noon. So this is one complete trading session basically from 2 AM in the morning till 12 PM. However, we're highlighting the two different sessions because we need to see whether New York sweeps London's high or low for a reaction. The time frame we're trading is on the 5-minute charts only, so again, no higher time frame analysis. We're just going to be waiting for sweeps of liquidity on the 5-minute chart. And the rules are that we will wait for a raid on a previous session level of liquidity. The sessions will be Asia, London, New York AM and PM sessions, and then also taking account of previous day's highs and previous day's lows as well. Once a level of liquidity is taken, we will mark out a break of structure that's required for a valid market structure reversal. So I'll go through that with you in the examples. The break of structure will be confirmed by a candle body close. So we're not going to use a wick through the level. We have to have a candle body closed. And also to validate our entry, we need to see displacement or a fair value gap within that break of structure. So there must be a fair value gap to confirm a valid OTE entry. So we're not going to be looking at taking an optimal trade entry if there's no fair value gap or if there's no candle body close over the break of structure. We'll identify our OTE once these criteria are met by pulling a fib from the swing high to the swing low, and we will go wick to wick to get our optimal trade entry levels. We will set a limit order at the 0.618 fib retracement. So this will automatically be triggered in, so we can set and forget this. We will have our stop loss placed above the high or the swing low. Our take profit is going to be at plus 3R. And as I mentioned, this is basically a set and forget strategy. We're not going to be managing the trade, taking partials. The only reason we will ever manually close the trade is if a reversal setup occurs, often going into the next session. Again, I'll show examples of this in the live charts. Let's now jump into bar replay mode and walk through an execution of how this strategy would play out. So we have our three indicators currently on screen. We can see the London session has just finished and we are moving over into the New York session. We've got London liquidity marked out with a green line here. So untapped session low, untapped session high. We also have untapped liquidity from the New York AM session from the previous day as well. So we are looking for a sweep of these levels of liquidity, and then we are looking for a reversal. Our fair value gap indicator is showing us our fair value gaps currently moving down towards these lower levels of liquidity. Let's wait for a liquidity sweep. So we've just swept liquidity, which means we can now start monitoring for a break of structure. So how are we going to identify our break of structure? We need to identify the last swing high that occurred before we take the swing low. So that would be this candle here. We have a lower candle to the left, lower candle to the right. The middle candle is the high, which is our last swing high that led to this break of structure lower. So if we're going to get a reversal, we need to see a candle body close above this level at the moment. Price is continuing down. We can see we do have untapped liquidity below us here, so we could be reaching for this. Our break of structure is still here, so we've not put in a new swing high at the moment. So we do have a swing high here. However, this isn't a valid swing high for our break of structure because this swing high did not cause a new lower low. So currently this is still our break of structure because this is the high that caused the lower low. So we've still got no break of structure here. We've had no new lower low, so our break of structure is still up here. So we've got a candle body close for our break of structure here. So price is pumped up, we have a candle body close. Our next rule is that we need to have a fair value gap in our break of structure, which is here. So our rules are now met. We will now start looking for our optimal trade entry, which will take from the lowest swing low to the current high, which is our break of structure. optimal trade entry. These are the fib extensions that I am currently using. So we have the 0 level fib, which is the top, and we have the 1, which is the bottom. So that's our range between 0 and 1. I am monitoring the 0,382. It's not important for this particular strategy, but you can often find the price will react to the 382 if we're in a particularly bullish or bearish move. So often we don't even get a retracement beyond the 50% level. 0.5 is our 50%. So I'm using this level to identify the premium area and discount area. These are the key areas that we want to take note of. Optimal trade entry, which is our 0,618, 0.66 and 0.786. Our entry is on the 0.618 for this strategy. So we are looking for price to pull back to the 0.618 and then we will take our entry at that point. You can ignore 0.27. This is just an extension which I was using for another strategy as a take profit level. We'll switch that off for this particular example. So what we're looking for here is we're looking for a price to pull back to the 618 where we can take our entry. So you would set your limit order at 618, your stop loss would go at the swing low, and you will be targeting 3R. Let's scroll forward and see how we move on. So we're getting a pullback, we're coming back into the fair value gap. We've just tapped the 618 perfectly, so that's just tapped us into the trade. Price is accelerating away. And then we've hit take profit with essentially no drawdown. Now yes, this was a cherry-picked example. This was the first example of the backtest that I did. It worked out absolutely perfectly. Not all trades will work out like this, but this is a great example of how the strategy should work. You've had your break of structure with a body close, leaving a fair value gap, optimal trade entry, entry at the optimal trade entry, looking for 3R. Price essentially went straight to 3R with zero drawdown. Let's now jump over to a short trade example. For this second example, we are going to take a look at a short position. Again, this is going to be a textbook example. We can see Asia has been consolidating. We've got untapped liquidity above us, untapped liquidity below us from the Asian range. Scroll forward into our trading window. And we can see that we have taken the liquidity at the high just into the London Open. Our break of structure is going to be here. So we need a candle body close, leaving a fair value gap to confirm this as a optimal trade entry reversal. So we've swept the liquidity, we can see we've left a fair value gap, we've had a candle body close and price is pulling away, breaking this structure. At this point we need to be pulling our fib from the swing high, following price down until it creates the next swing low. Our 618 currently is just into this order block. Let's zoom in. So price continues down. We follow price down. So what you will find is after consolidations in Asia, we often get a Judas swing in the London session, which means that we will take one side of the liquidity and the price will pull away in the opposite direction. So this is our Judas swing setup. So we're still looking for a short position. Even though we've swept the Asia liquidity, I would take the first sweep as my signal for the direction. So my bias now is for short trades. So price is pulling back now. We're coming back towards our optimal trade entry. We will have our limit set to enter at the 618. Stop loss will be above the high and our take profit will be at the 3R as per the trading plan. Price just taps in really nicely. So in this example, we can see we do get a slightly larger pullback coming to the 786 and filling the uppermost fair value gap. As I've mentioned, we are not going to break even. We're not adjusting our take profits, so we're just going to let this trade play out. After that initial pullback, you can see price does eventually drive down to target, giving us our 3R trade. That's kind of a textbook example of a short trade. As you can imagine, trades don't always play out perfectly, and sometimes we do need to manage these. So as much as I'd like to remove discretion completely, there are situations where you may need to think on your feet. This is an example of such a situation. So prior to London coming, we can see we've swept Asia low. We now have a new daily low that was put in this first hour before London opens, and we can also see that we do have relative equal lows. So this is just pulling in some extra analysis from ICT's teachings. Relative equal lows, and again relative equal lows here coming into the open of the session. So we've swept Asia, so we could be looking for buys anyway. We do have two relative equal low levels of liquidity below us. As London opens, we've swept the first hour low here. Our break of structure for a long trade would be this swing high here. So again, thinking of the Judas swing, as I'd mentioned, we had a consolidation in Asia. We have swept the Asia low. So I would be on guard for a long trade, despite this break taking place just before my trading window. So price is dropping down. We have now taken these relative equal lows. Our break of structure is now this level here. We'll remove this sell side. So if we were going to take a long position, having taken relative equal lows, we need candle body close with fair value gap over this break of structure. We're digging down even lower. So again, we're following our swing highs for the break of structure to confirm our entry. This is still our valid break of structure, so we don't need to adjust this at the moment. Price has dug into this sell side liquidity and is now rejecting with displacement here. So this looks like a strong candle. It's much bigger than the candles around it. This I would class as a displacement candle. We just need to see a fair value gap and body close above this level. So we get a strong wick above, but there's no body close. So there's no entry here. We're not going to be looking to take a long at this point. We reject back into this zone. Again, no body close. No body close. No body close. So again, none of these are giving us a valid entry. We wouldn't be looking to take a trade at this point. We do now get a body close above our break of structure, and we do have a fair value gap, which means we now have a valid potential optimal trade entry. We have clear levels of liquidity above us. So we have the Asia high and a previous New York AM session high above us as well. So if we can get a pullback into this optimal trade entry, we can go long. Price pulls back, taps discount. Unfortunately, didn't dig into optimal trade entry, so there's no long there. We've taken the Asia high, but we still have liquidity above us. Again, based on the Judas swing principle, I would still be looking for a long position. So optimal trade entry has now moved slightly higher into this order block area. So price is pulling back. Still continuing higher, so we're getting slightly more extended now. We will still follow this up. So this is going to be the optimal trade entry of the London session. Again, still with valid liquidity above us, so I can see a target above us. Aggressive move back down into the range. Optimal trade entry was hit, so there's our trigger. We would have had a limit order to tag us into the trade. We would have our stop loss below the low. And as mentioned, we would be targeting 3R, which is essentially sweeping this upper liquidity and then potential reversal on the cards. So we're in the trade. We'll get a good reaction from the optimal trade entry, so we are pulling away nicely. We've come and taken the session high here. So this is where we are on guard now, because we are approaching the end of the session. We've taken the the previous New York PM session liquidity. So you see that green line has just disappeared. That means liquidity has been swept. Price is going higher. Not quite hit our 3R yet, so we are currently at around 2.6, 2.5R in profit. So our session, we would have set and forget this. So I would be in this trade and I wouldn't be monitoring this because we're in the London, I would be away. However, we're approaching 8 AM, so this is when New York is about to open up. So I would be coming now back to the screen to see what's going on for the New York session. I would have seen that we have taken that AM session liquidity. We've broken structure to the downside with displacement. So again, displacement is always the key. See where the big candles are leading and what that's telling you. And I'm seeing that the displacement now is coming to the downside. We're almost back to entry at this point. So New York has opened. We're inside the London range, but we have been leaving displacement back down to the lower side. So we can see that we are now closer, let me just delete this, to taking out the London low liquidity than we are to taking out the high. This is one of those situations where I would be pulling a fib using discretion, understanding that we've taken Asia high, we've taken the AM session high, and we have now broken structure. So I would be using my optimal trade entry here. We've broken structure with displacement, candle body closes, optimal trade entry is now here. So looking at this, I would want to be closing out at optimal trade entry to potentially take a reversal trade now, aiming to come back into this range, specifically taking out the London low. Price digs deeper, so we're now back in drawdown. Again, we're not going to be closing out early. Price will either hit our stop loss or set us up to manually close for a reversal. So we've not hit stop, we've pulled back, and now we are going back to optimal trade entry. So we have just tagged optimal trade entry where we would have had a short position ready and waiting, stop loss above the high, targeting our 3R. And we would have closed this trade out at the optimal trade entry. So you would have potentially got 1.4 in this one, and then you would be looking for a 3R reversal now, taking out the London session low. You can see this was a pretty epic trade. It tapped it perfectly and has pulled away nicely, going straight to your 3R trade. So this is an example of having to think on your feet. We can see that we almost hit target, but then we had a valid reversal trade coming into the open of the New York session after taking a previous New York AM session sweep of liquidity. So not every single setup is going to be set and forget. You may have points where you want to manage these slightly different. So this all comes with back testing and forward testing this strategy, so you can get a feel for yourself how price should be reacting. So in this example, I'm just going to show you where a setup may be invalidated and how to mitigate some losses. We've taken Asia low into London, which means we are on the hunt for a long position. We don't get triggered until down here. So this is our break of structure. The candle body close is this candle here. We can see as this candle body closes, we don't get a pullback to the 618. So that candle's closed, we have not pulled back, so we are following up price action with our fib. Price never comes back to the 618 during this run. Coming into New York, we now have the London high is taken. So London has closed, New York has opened. It swept the high just by a tick and then created displacement with a break of structure lower. So this has invalidated any long entry, in my opinion. I'm not looking for longs here now because we've taken the London high and we've started displacing lower with fair value gaps and breaks of structure, which means that I would be on the hunt for a short given that London high has been taken. Optimal trade entry, so we're taking our fib from the high to the swing low, which is just down here. And unfortunately in this instance, optimal trade entry is not tagged by a pip, so there was no entry here. But the long position was invalidated. You wouldn't be taking a long at the optimal trade entry here because you've taken London high and began displacing lower. So you've got a valid short position here, which cancels it out. So before we close out the video, I just want to run you through some thoughts that I've had while backtesting this. First of all, you all need to be aware that my sample size is only very small. 41 trades is not enough to say that this is the best strategy in the world and we should all go and invest hundreds of thousands of pounds in trying to trade this. You need to backtest it yourself. I've only backtested this on Euro USD. You should conduct your own backtesting and forward testing to confirm your edge on your chosen pairs. From my understanding and from my research, this should work on all USD major pairs, but as I say, you need to backtest it yourself and just ensure that you fully understand and have your own edge when trading this. The next point is to avoid major red news, specifically PPI, CPI and FOMC. So I won't take trades 15 minutes before or after a news release. Price action is just totally messed up within those times. Setups are unreliable. Through my backtesting, I was only working on Euro USD. However, I did find that news on the pound also affected the euro. So you need to watch out for red news folders on the pound, the euro and the USD. Even if you're trading after a news release, you must be aware that fair value gaps and breaks of structure that are created during a red news release can create false signals. Price will often fully retrace red news driven price action, which means that retracements will totally ignore fair value gaps, order blocks and OTEs. So if you're going to trade in these situations, I would recommend not setting a limit order but waiting for price to retrace back to optimal trade entry and then use the 1 minute time frame to confirm your entry with a break of structure and displacement on the 1 minute. Also, consider lowering your risk in these kind of situations as well. Instead of risking 1%, risk 0.5% or whatever you choose to. Another observation that I've made is during the London session, we will often get a Judas swing, meaning that the Asia high or low will be swept and then price reverses. So this is kind of pulling breakout traders into the market and then price will reverse. In this situation, I focus on trading in the direction of the Judas swing reversal, looking for higher levels or lower levels of liquidity on that reversal. During the New York AM session, if London high or low has not been taken, we can often see, this is specifically apparent when price is opening up in the middle of the range, the price will pull back to the optimal trade entry of the London range for a continuation trade. So this was shown in the last example that we just went through, where price pulled back into optimal trade entry to continue lower, seeking the London session lows. And then finally, kind of outside the criteria of the model that we've been discussing, but if you find that Asia's trending instead of consolidating, London may pull back to optimal trade entry of the Asia range for a continuation. So we may not get a Judas swing because Asia has not been consolidating. Instead, Asia is now trending in a particular direction. So if you've got quite large moves in Asia and it's breaking out, you may find that you get a pullback to optimal trade entry and then a continuation in London. I'm going to jump into a quick example now for you of this particular situation, just so you can kind of log it and understand what I'm referring to. So here we can see Asia had a large move at the open of the Asia session and is now consolidating above New York PM session high. So this to me looks like we could be potentially breaking out. We've not swept the PM session high and pulled back in the range. We've swept the high and we are closing or consolidating on top of this range. opening up towards London, we can see we are breaking out above the Asia high. So this looks more like a trending market than just a tight consolidation. This large impulsive move up is signifying we've potentially got a trending move on. As London opens, we can see again we are respecting this high and the new week opening gap as extra confluence, and we are breaking higher. So in this situation, we can look from the swing low of Asia to the current high in London, observing where our optimal trade entry is. We can see that we do have resting relative equal lows here above optimal trade entry. We do have a rather large fair value gap, which would be below our stop loss. So we could then potentially be looking for continuations here, bearing in mind that we have liquidity above us in the form of the New York AM session high. So we can see the price is pulling back aggressively towards our optimal trade entry. We could be triggered in at this based on a continuation trade from this impulsive move in the Asia session. Take our 3R. So we've just tapped into optimal trade entry now. Price is pulling back. We're into this fair value gap also as additional confluence. The price begins to pull away quite aggressively, ultimately hitting the 3R. So this is where you can observe the price action in Asia just to get a feel for what potentially may happen into the London session and then continuing through the rest of the day. So there we are, guys. That's the optimal trade entry session liquidity sweep strategy. These are the rules. Take a note of them and go back test and forward test for yourselves and let me know how you get on. I hope this was really useful. If you did enjoy the video, please leave a thumbs up. If you have any questions, leave them down in the comment section below. I'll do my best to try and help you out. Likewise, if you're enjoying this kind of content and would like to see more videos of this nature, please consider subscribing. I'm dropping session reviews more or less daily and working on strategy videos as and when the ideas come to me. Thanks very much again, and I'll see you in the next video.